Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Louis, and I'm excited to share today's topic with you. As we navigate the complex landscape of the stock market, it's essential to stay up to date on the latest trends and insights from industry experts. Today, we're going to explore a recent interview with Nilesh Shah, Managing Director of Envision Capital, where he shares his thoughts on the Indian market and some of the key sectors that are expected to perform well in the coming months. According to Shah, smaller banks and specialized credit plays are likely to outperform in the current market environment. He also believes that financialization of savings in the economy is a multi-decadal opportunity, making it an attractive space for investors. Additionally, Shah is bullish on online investment platforms, such as Angel One, which he thinks have the potential to deliver market-beating returns. It's interesting to note that Shah's views are not just limited to the banking sector. He also sees growth opportunities in other areas, such as online insurance distribution and payment fintechs. These spaces, he believes, will continue to demonstrate high growth rates, making them an exciting prospect for investors. As we consider Shah's insights, it's essential to remember that investing in the stock market always involves some level of risk. It's crucial to do your own research, diversify your portfolio, and consult with a financial advisor before making any investment decision. We'll be keeping a close eye on these developments and bringing you more analysis and expert opinions in future episodes. For now, it's clear that the Indian market is full of opportunities, but it's also important to approach them with a critical and nuanced perspective. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of finance and markets. In this segment, we're going to take a closer look at what's been happening in the Indian stock market. According to recent reports, the market has been on an upswing, with all sectors except media showing positive gains. Nilesh Shah from ICICI Direct shared his technical view on the indices, stating that the Nifty has broken through its biggest resistance level of 25,200 and is now looking at a target of 25,700. He also emphasized that any dips in the market should be seen as buying opportunities, particularly for mid-caps and small caps, which are expected to catch up soon. In terms of specific stocks, Shah recommended L&T as a promising investment opportunity. The stock has broken through its 5-month falling trendline, supported by strong volumes, and seems to be finding strong support at the 20-day exponential moving average. With a target price of 3,928 and a stop loss at 3,570, L&T appears to be poised for new highs in the coming days. It's essential to note that while these predictions sound promising, investing in the stock market always carries risks. It's crucial to do your own research, consider multiple perspectives, and never invest more than you can afford to lose. As we move forward, it will be interesting to see how the Indian stock market continues to evolve, and whether these predictions hold true. For now, it seems that investors are cautiously optimistic about the future of the market. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. Today, we've been exploring the complex world of geopolitics and its impact on global markets. As we wrap up this episode, I want to bring your attention to a developing story that's making waves in the energy sector. It appears that tensions between Israel and Iran have led to a surge in oil prices, with potential benefits for Russia. According to reports, Russia could gain from the crisis in two ways. First, by selling its oil at a premium due to supply shortages, and second, by potentially substituting Middle Eastern oil and gas exports to China. Now, I want to emphasize that this is a rapidly evolving situation, and it's essential to approach it with a nuanced perspective. While some analysts believe that Russia could benefit from the crisis, others argue that the impact on global markets will be more complex and far-reaching. It's also worth noting that the Russian government has been dealing with its own set of economic challenges, including sanctions and declining oil revenues. So, while this development might provide a temporary boost, it's unlikely to solve Russia's deeper economic woes. As investors, it's crucial to stay informed about these global events and their potential implications for our portfolios. However, it's equally important to avoid making knee-jerk reactions or getting caught up in speculation. Instead, let's focus on the facts and consider multiple perspectives before making any investment decisions. Remember, investing is a long-term game that requires patience, discipline, and a deep understanding of the complex interplay between geopolitics, economics, and markets. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.